Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I hope y'all had a great weekend and spent some time away from everything and got to enjoy yourselves a little bit. Let's check out where the markets are at right now. The market's reacting very positively to most of the news that happened over in Europe over the weekend, and saw them all flying up, and just with the elections that came out and everything else. But we got the S&P is up 9 points. The Russell's up 13. NASDAQ is currently about 30 points on the day, with the Dow up 50 points right now. We have copper is currently up a little bit, not that much. We got gold, though. It is a drop down 2%. And let's see, looking on over at silver. Silver right now is about down 2% as well. Natural gas is up almost 2%, 1.6, 1.7% right now, increase in the price of natural gas. Oil dropping down about 40 cents on the day. We got corn is moving a little bit, down a little over 1%. We got soybeans flying down 25 points, down over 1.5%. So definitely some nice activity and volatility in the markets for you to take advantage of this morning. Hopefully you're getting some of that. We got the euro dollar's down 28 pips, the Aussie dollar down 5, pound dollar is currently down 52 pips on the day. Dollar franc is up 32. Dollar CAD is flat, unchanged on the day compared to the previous day's settlement. There we got dollar yen is up 20. We got Aussie yen is up 16. Euro yen is down 3. Pound yen down 30 pips. Euro pound up 11. So currency sort of quiet as a whole. As far as just looking at the settlement prices, of course, you got to see those intraday charts to see the real picture. And let me go ahead and we're going to get started. We got to know what's going to be happening this week. And so just to make it easy, what I'm going to do is I'm going to flip on over. We're going to pull up our charts this week because I want to make sure we do get to this today and lay out any news plans and things that we might need for helping you for the week. What news should you be paying attention to? Even if you're a news trader or not, either way you're a news trader, because if you don't know what's coming, then it can get you. All right, so let's go ahead and scroll on over here, and we'll do a quick recap real quick first, just catch up. Like I said, we had the parliamentary elections and some interesting dynamics and changes. Nothing that really shifted much of anything, but things that would actually make it a little bit harder for them to accomplish some stuff. Some other parties increasing in their percentage, which usually does help an economy whenever they're not able to do anything, because that means they get out of the way and they don't pass more regulations. But anyways, elections going on. Draghi does his little speech, all that fun stuff, and just watch the euro if you want to go look at that, sort of as a reaction, like one of the many simple gauges. But we can go on, and we got the VIX still dropping, just unusual. I want to say I read a thing that said Scottrade said like 97% of users or traders or whatever are optimistic about the market. Obviously not necessarily the best sign for the market when that's the case. But if we go down and just look at the reaction, like it popped right up, like right here, just flying up on the news, but then gave it all away. So, elections are over. That's wonderful. Now let's get back to reality, and we'll see what happens. So it's moving on right down here. It's going to be real interesting. We'll go over. Let's check out. Looking at futures there. Not really seeing just a massive amount of volume. Let's see if we get a little more detail. Move on in. And there we go. So some volume right there. But if we scroll right on over here, saw pretty much a big what you could call a volume spike, I guess, relative. There's some massive ones back here. But, nothing that major at the moment. So we'll see what the euro does. Looks like it's just going to chill out for the rest of the day. All right, so we got the euro knocked on out. And let's see here. Moving on down. Check it out today. Nothing major besides more speeches from Draghi. And then we do have the Bank of England Governor Carney. He's going to be speaking. Let's see if that's a major speech we need to be aware of. He'll be talking about inclusive capitalism. New buzzword of the day, right? So inclusive capitalism. And but it's a whole conference dedicated to the entire idea. And it's Rothschilds. I want to say it comes from Lady Rothschild. But the idea is obviously that it seems a bit oxymoronic in itself. But it's supposed to be two complementary meanings. Poverty is significant. Here, let me pull something up. Let me look on this. But its significance in poverty, which have already embraced or transitioning towards capitalism. And companies and non-government organizations can sell goods and services to low-income people, which may lead to targeted poverty alleviation strategies, including improving people's nutrition, healthcare, education, employment environment, but not their political power. Okay? So, basically the idea of it's figuring out a way to make it where it's financially beneficial to help the poor, I guess is the idea. But I'm not exactly a, expert on that, but that's what he's talking. If you want to know more about it, check out his latest release coming out at 3 o'clock. And Karada's going to speak here at 8 o'clock. And let's see here. He's just speaking in Tokyo. So that can cause some definite volatility in the yen tonight. If you're trading tonight, be aware of that. So be aware of Karada speaking tonight. Be aware of Governor Carney speaking at 3 o'clock. And, of course, we've had plenty of speeches all day. And that's really, all to be aware of. Construction work done, quarter over quarter. Usually not a big report. Let me pull up my news stat engine, see if I am even looking at that. And, meaning, is it even one that I even work on? Nope. So, literally, it's not even, there's not enough information on it to even pull stats on it. So, not really worried about construction work done. Going in and looking at Wednesday, it'll be another quiet day on the news front, okay? We have some, random reports coming out, but, maybe just keep your eye on the miscellaneous. But all I can tell you, there's really just nothing worth trading the entire day on Wednesday as far as news reports, which can be good. Market can, trend a little easier. They'll be slower, though. Volume will be lower, okay? Much like today. Today, it was nice, clean trends, but just slow. But it was definitely, just a solid move on up. I'm just looking at my reports over here, and it's backing up and looking at it. It's just sort of got this nice little run. That's about it right there on the Aussie. But let's see here. We got Thursday. We're going to have some more holidays. So Switzerland, France, Germany, all going to have Ascension Day. So, and then we'll go on to the Italian 10-year bond auction. Not usually a mover. Used to be, but not now. We got preliminary GDP. That will be something we'll be paying attention to. Okay? So let's see here. We also have jobless claims, and we have pending home sales. So really all three of those could be ones that we look at. And so I'll come back to those here in just a moment. Of course, we also have our regular reports, but remember that we need to move crude oil inventories on your calendar. Bump that to Thursday. Okay? And remember, if you have any averages and stuff, they're going to be a little bit off because it's on a different day of the week. Normally, crude oil inventories comes out on Wednesday, but it's going to come out on Thursday this week. So any averages that you look at will be a little bit off because of that. But just remember, it's a different day. Released this week, so it won't be coming out Wednesday. Will be coming out Thursday. Don't be caught off guard by it. I'm less concerned for you on Wednesday than I am for you on Thursday, simply because of that. And then, let's see, pending home sales. We got that. We got crude oil. We got natural gas and oil coming out. Pretty much, it's 30 minutes apart there. Just a tip for you, if you do want to ever get these reports as fast as possible, to me it doesn't matter. By the time it's happened. But you can click on the latest release link there, like in Forex Factor and other ones, and they'll show you, directly, this page will actually refresh over and over again. And it'll actually start refreshing automatically when it gets closer to the report. All right. So that brings us on down to Friday. On Friday, we're going to have, let's see, what do we got? Japan housing starts, and GDP over in Canada, And we'll be looking at personal income and outlays as well, seeing if we can find some potential iron condor trades. But first part of the week, just really quiet. Yesterday, today, like I said, maybe aware of a couple reports. Big things, just all the speeches going on. The biggest thing I'd say to be aware of for Thursday, a couple things, but one is just make sure you're aware that there is a holiday happening in Switzerland, so that's dollar franc, right? And then Germany and France, that'll affect the euro dollar, any euro pairs, euro yen, etc. But yeah, be aware of those. Now let's go down. Let's look at a few details on the reports that are coming on out, and we'll see what all we can do. And let's see. We got crude oil inventories. I want to see. Let's get some more details beyond that. And okay, so what we're going to do is we're going to check out the reports on Thursday for GDP here in the U.S. Okay, and that's going to be coming out right here. It's the preliminary GDP. Okay, there's the actual and there's the advance. So you really want, and then you got the preliminary. So you got advanced, preliminary, and final. And this is going to be the preliminary, okay? So it's the second of the reports, meaning the advance has like the highest impact because it comes out first, and then they have the preliminary, which is like a little bit more revised, and then the final. Pardon me. So you just want to be aware that they are three different reports. They're similar. They're basically the same. It's just, wait a minute, here's an update on the score, okay? So, and it should not be a big change. So usually we just don't see a massive impact on that. But let's go ahead and look at it, and I'll read through the stats for you, and we'll talk about a trading plan on how to trade the GDP this Thursday when we get back from this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's a trial to Market Insights started today. Visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Invest investors. Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, let's come on back here to the Diagnostic Trading Hour. And, okay, so we're checking out right now. We're looking at the U.S. GDP that's coming out this Thursday at 8:30. Talking about what kind of impact does it have on some of the different FX pairs. One of those pairs that we could check out would be, say, the euro-dollar. I'm looking across the range. And the ones that have maybe a smaller, consistent impact versus a larger impact. And just trying to see if we can find something that will have like the biggest possible move for us. But it looks like overall, still this euro dollar makes it really simple. One thing about pound yen, pound dollar is I like the pound yen if you can pull it off compared to the pound dollar, simply because the spreads are narrower. So the floor to ceiling are narrower. So it defines your risk, but usually you get the same premium pricing built in. So you can get more when doing a neutral trade. But it also, pound yen does have that funny nature of just exploding sometimes. So it may not help you. All right, euro dollar, 24 pips, 6 pips, 25, 18. One big move there was about, what was that big move? Let's see here. It moved, it actually came back, but let's see, 24, 1, 25, 26. Oh, yeah, one time it moved pretty big at up to 11. 3 o'clock. Let's see if I can find out what happened by the end of the day. That's 11. Let me see if I find out by what happened by 3 o'clock, if that would have been chosen instead. Because a lot of times these, they'll pop up and then they'll come on back down by the end of the day. But nope, that one stayed there. Looking on over, going further down, 17, 38, 24, 22. One other big one. So we had 2 big moves that took place. And comparing those, you would have had, let's see here, some larger moves had you waited. So 11 o'clock. Yeah, basically it did turn out better for you overall if you used 11 a.m. So 10 out of 12. That's not bad at all. 10 out of 12 worked out very well. Stayed within 25 pips. So if you could get somewhere between, I'd say, $25 to $30 on the GDP, on the euro dollar, let's see here, and being at 8:30, so the 10 a.m. release would be what you have to be focusing on. But would actually help on some of those ones that took off a little bit bigger, because they popped up there in the last hour or so of that report when it came out. So yeah, so we're going to go for $25 to $30 minimum profit on the euro dollar, entering at 8 for expiration at 12 on an iron condor, which means we buy the spread below and we sell the spread above. Okay, buy the spread below, sell the spread above through our euro dollar GDP Thursday report, 8 a.m. And the reason I say 25 is a lot of times it will go that, but a lot of times it'll just be like 1 or 2. And if it's a 25, the worst thing that happens is you broke even. If you can get more than that, obviously you want it. But that gives you just a quick summary, easy summary. Okay, if we go on in, and we're also, of course, going to have jobless claims come out at the same time. And let me see the impact here. Okay. All right, majority of the time, jobless claims have very, very small impact. Every once in a while, though, obviously, if they're majorly off, that'll rock everything. And it comes out at the same time, but usually not at the same time as GDP. And so part of what I'm doing right now is I'm doing a quick analysis on GDP jobless claim crossovers. Pretty rare. The big moves that I see, you should have a lot of other reports. Pardon me there. And, yeah, okay. So that is with our plan. We can just stay with euro dollar there for the GDP and jobless claims. Same trade. When we come back, we'll talk about pending home sales. All right? So get the plan laid out for the week. A quiet news week, but let's go ahead and have it ready to go. All right, stay there. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. And we're going through the various reports, getting down all the stats, getting down the news plan for the week. All right, so we got the GDP coming up on Thursday. We got a plan for that. Enter at 8 for 10 o'clock expiration. Looking at a iron condor for buying below, selling above, $4.25 to $30 or more. How are you going to find that spread? What are you going to do to locate it? You can't go over to Nadex. You can pull it up if you like doing things the slow way. If you want to do all the math yourself. If you want to pull out some calculators and rig up some Excel sheets. Or you can just click a couple buttons and have it done in a few seconds. So it depends upon whether you'd like to have it done for you or you'd like to manually do all the work. The end result will not be any different and may actually result in, better results because it's live. Meaning when you're sitting there and you're taking time to do the math, you're clicking around, you're doing the calculations, things are moving. And in this case, especially in trading, time obviously is money. And so it can cost you a lot. So what would you do to pull it off? Well, let's look it up. You'd log on right in here to the spread scanner. And I'll show that to you. If I can ever get the Chrome browser to cooperate with the shrunken monitor I'm using here for this. Okay, there we go. And so if we go up here, we're looking at it. And I go and I say, hey, I want live or I want demo. And after I've chosen whatever account it is I want, so let me log in on this browser to my demo account. And I'll show you how it works. Okay. And again, I'm on the spread page. We got spreads, we got binaries. And so logged into that. Now that we have that done, go over here, you check whatever instrument it is you want. Say like euro dollar. Make sure you don't have any filters on. Okay, so you choose live or demo. Make sure there's no filters on there. Choose euro dollar. Scroll down here, and now this is what you're going to see. And just to give you a quick walkthrough and overview of what this is, let me turn off the Aussie, turn it off. There we go. We got a profit and loss graph. Very, very simple. Okay, it can look intimidating, but it's not. The reason it has a whole bunch of things lined up is just because we have everything selected by default. So if you go over here and we click on it like that, then what happens is it tells you this is what can be made or lost on this contract. Okay, so this is if the euro dollar moves up or down. That little gray line in the middle, that's the live euro dollar. So if it moves up or if it moves down, what will you make if it goes up? Right there, what will you lose? In this case, if it goes down, could be vice versa. What would you make if it goes down and lose it if it goes up? But you got profit and loss on the left side. You got price on the bottom. Okay. Then over here gives you a little information. What does the Nadex contract actually mirror? The euro dollar spot. Okay. And we fill you in, just in case you're new to Nadex, we give you a lot of helpful information on this. But it'll tell you, the Nadex pricing system, it's looking at like index futures contracts, not indices or ETFs. Commodities, looks at the commodity futures contract, forex, spot forex prices. So, and you got to make sure you use the right contract whenever markets roll over. So, Nadex, a lot of times they have weekly contracts and things, so they can't roll over like right on Thursday, because it's sort of rollover is not just like this, the future stops trading and the next month starts trading. Okay, that's why it's a rollover, and so that way there may be a little bit different. So you always want to be able to look at the contract. It's really simple. Okay, you don't have to look at anything but the contract itself. It'll tell you June right in the name of the contract. Really, really easy. But to make it even easier, I've actually put the names of the contract instruments. So like right here, you can see I'll actually tell you that it's NQ0614, like if you're using, say, Ninja, or it's NQM4, say if you're using Thinkorswim, it'd be / NQM4. So I'll tell you the exact contract month you should be on that just lines up, again, with the naming mechanism built in right there to make it really, really simple so you know what chart you want to look at. And you do have Nadex charts. I don't recommend using the charts in Nadex. They're an indicative chart. They're not the actual underlying chart. They don't have volume. They'll have gaps when that exchange is closed, even if the other one is open. So you don't want to try to go in and use those charts. They're helpful when you have nothing else available to you for the moment. But it's not one of those things like, I don't have charts, I'll get back to those later. No, you can get charts free. It's easy, free data, free platform, live, okay? Not a hard thing to pull off. There's literally no reason to not have, excellent charts. And so you can get them with, like I said, without any issue at all. But when the exchange is closed, you're missing a ton of data. So you need to make sure that you do have, like I said, a real charting platform. All right, so we get in here. We got the euro dollar. We got our P&L graph. We select something. We know what contract it's following. If we want to know what the equivalency is, 1 euro dollar mini lot equals 1 Nadex euro dollar, or 10,000 units of euro dollar. Okay. To futures contracts, it'd be like 25 Nadex spreads, because the euro futures, without going into a lot of detail on this page here, the euro dollar futures are 125,000 units of currency. So obviously these are at 10,000 units. So to make an equal number, you need 2. I mean, you could offset it by 1 and make it 12 or 13. But if you want to get exact equal ratios, that's how you would do it. Okay. Now let's look at so how would I choose what spread I want for an iron condor? Well, if there is one, and there may not be one. Okay. So if there is one, you're going to go in here and you're basically going to look right here at the profit column. So like that one right there, and I'm just sort of randomly picking here. And I want to say this one. But you'd want a couple that would line up, and it'd look a lot like a... Here, I'll show you what it would look like. It's just it'll look better than this. 35.20. And let's see if we have any 36.20s. There we go. Well, that's the opposite side. Low risk. There we go. Perfect. Okay, this is what it would look like, except for it'd be the opposite. So this is what's called a straddle. Now you could choose to do a straddle on one of the trades. I say, hey, the average move on these is like a lot of them are 25 pips, easy. If you go in there and you can get like that euro dollar trade that I said, hey, look for an iron condor to get $25. If you can pull the thing off for $10 or $11, by all means, that thing flies up 20 pips. You're gonna make a 1-to-1. Okay, so you don't have to just do iron condors when I'm calling them out. It's like one or the other. But if you get it for $25, if you get it for half that, then yeah, go ahead and go for the straddle. And so make sure you put that on your news plan that, if you can get an iron condor often for half of what's stated, then, because that's what I'm telling you. I'm telling you the expected move. When I say 25 pips, I'm saying it's probably going to be either 25 pips up or 25 pips down, and then it's probably going to pull back, which is why we're willing to take just 25. If it moves up 25, we're basically at break even, and it moves back down, then we make some money, okay? So if you could get one for half that cost, then you could go in for it, and that could be a potential trade that you could do. So that was like $11, so even better than half. So that'd be a straddle. If you were iron condoring this, there wouldn't be any money in it right now just because of time of day. But if we go over and we find the 35.20, 36.20, and on the opposite side up here, so right there, you'll find the 36.20, 37.20 down here. If we can. I know there's one out here. So 36, 37. Yeah, nothing in there right now. There's no premium in there. But that's what it would look like, okay? So it's going to look really weird because you're like, why would I want to do that trade? There's so much loss built in. Yeah, but if we get $25, it'd have to move 50 pips against us on a report that 10 out of the last 12 times has only moved, 25 or less pips. So therefore, it actually comes out to a very good neutral trade that only lasts about an hour, hour and a half. And you can have a nice 1-to-1 risk-reward ratio. Maximum, not your maximum, but it's not like a binary where it's all or nothing. I mean, every pip is $1. So if it's 25 pips, you break even. If it was up 25 or down 25, you break even. Every pip above that is $1 loss. Every pip below a 25 pip move up or down by expiration is $1 gain. And you start doing these just in practice, and you will really, you'll like them a lot. So there has to be implied volatility, which is going to make it a little more difficult right now. Okay? The VIX is so low. And, it's just insanely low. So I do want you to be on the lookout on all of these trades. I want you to be on the lookout for a really low cost, okay? A very low cost, straddle as well. Don't forget that because you may just find the one that's just really cheap, and it really is just a better trade. It's worth, the risk. They're trying to go in and, risk $10 to basically net $10 out. So if I risk $10, and let's say I'm going to risk $5 on one side and $5 on the other side. I want to walk away with $10 in my hand because I put $10 at risk. Then what would I do? Well, I need to make the $10 and I need to make the $5 on the other side. Okay? So that means I need to make 15 on either side. So basically what I'm going to do is I'm going to put a take profit in at 15 ticks above where I bought the upper one and 15 ticks below where I sold the lower one. And that puts you at about a 20 pip move on the market if you had $5 risk on both sides. So it should work out well for you. But looking at the VIX again, making new lows, okay? New lows for the year. I think new years for the last couple years. We'll go on back. Let's see right now. This was last Friday. Pulled back a little bit today, but still moving on down, okay? So, and this is one of those things that just bugs me. That's why, let me show you this. This is a good chart to show this on. And why I don't usually use candles. Okay? So let's see. They may have fixed the bug on their candles. If they did, that's awesome. And here, I'm going to put these side by side like this. And we're going to go to dailies. Like right here. So yeah, their coloring mechanism, sometimes it can be off on different platforms, and I'll see this like a lot more often than you'd think. But you'll see like green and red. Like it'll be different on candles versus open eye low close. And so you'll see a lot of times when you see my charts, I'll have bars up. A lot of times I'll have actual bars that have nothing to do with color at all. I'll just be looking at the bar itself. So that way I have to read it versus get that casino mentality. Red, green, back and forth going on. But you'll notice how the colors will diverge, and they shouldn't be diverging at the exact same bar. All right, we got Richard from New York. How you doing, Richard?
Hi, Darrell. The markets this morning, is that part of the Fed buying bonds, and what websites do you watch so you know that's going to happen?
If you want to know go to NewYorkFed.org. And that's where to find out what all the federal bond buying, like they list out the schedules. Okay.
Right. Do you think the market spiking up today, was that part of the Fed program?
No, I think that was due to Europe. So all they had the parliamentary elections that happened this weekend, and because it flew up yesterday, it was up even more. Like we had just a lot of volatility in that, and I think that was the main impact on all of it. But if we go over and we look at, here I'll show you real quick, just the overnights, and I know we had the holiday thing and all that going on, but yeah, because the markets were rallying over like 1%, like over on the DAX, all this other stuff. But if we go in and look at it, you'll see that it was already popping up. See how right here Monday?
Right.
So we had the markets rallying up more. I think it was just basically the U.S. market's now really responding because they didn't really get their full response in with the Sunday, Monday, with everybody being on vacation. Yeah. But it was basically just the results. It wasn't like there wasn't going to be like complete chaos introduced into the system with the new parliamentary elections. But there's a lot of new stuff coming in. There's a lot of like anti-EU groups starting to rise where they're wanting to basically take back their independence from the EU. So those percentages did go up, which is a warning signal, warning shot for all the political, people over there. But at the same time, status quo is going to be there. It's going to be harder for them to do difficult regulations, and therefore that, hey, less regulations, good thing, and the market rallied on that. I think that's the number one reason that we're up right now. So just the global view of the outcome of the elections.
Could you talk about patterns throughout the day, like there's certain times of the day where the market will go up or, refuse to go down, or at the end of the day there's certain trends that happen. Do you use those patterns to trade off? I mean, in terms of how do you know that the market is not going to spike down on you if you have long positions, or like on some days when the market is up significantly, you're talking about how clean it is, and how do you know the market's not going to spike against you, and how do you hedge your positions?
Well, I never know. So that's one of the things I always, just to tell you, you never know. And that's a healthy view. So versus go, hey, the market's got to do this. But I'll tell you a couple of things that I use specifically. Help me on that right when we get back. Stay right there, okay?
Right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And right now we're just sort of going over some of the things to help you know when the market is basically at a tipping point. So, you there, Richard?
Yes, absolutely.
Awesome. The number one thing I can say that I use on a daily basis, like the most duplicatable thing that I use, really is the deviation levels. It's statistics, and most people, myself included, haven't spent a lot of time studying statistics, right? And
right.
So we don't include those into our trading, but the market does. The algos do, okay? And it's sort of like what I use is sort of like what we've all heard about the bell curve and standard deviation and what's the average and all that move.
Right.
But the problem with all of those methods, those historical pivot methods, and there's pivot levels, there's trader pivots, there's Woody's pivots, there's these guys' pivots, that guy's pivots. They're all based on yesterday's price action. Okay? And what I need to know is how far is the market going to move today, because that's the only thing that's going to help me. And this is a method I actually learned from a floor trader, an options floor trader, and he taught me a long time ago. And he used it for a completely different strategy and system that he used it on. And then I literally got just the idea one day. This was like just literally just a couple years ago. I haven't had this forever. And I was like, what would happen if I just started plotting all these levels out for my day trading? And after doing it for a while, I just started, it was just hitting it spot on, spot on, spot on. And so then I automated it. And that's why it's up on the site. But just to show you an example, like on the Russell today, okay?
Okay.
And here's one deviation level. And I'm looking at two things. I'm looking at the one deviation level. So I'm plotting that right down here for you, where it says like TF, okay? And then I put it in a table. You can copy and paste this out really easy. You just copy it. A lot of guys just copy and they paste it out into Excel and just change the color, black or whatever. But anyway, so So I find that one deviation level. I also look at the end of the line here, which shows you what a deviation is, like 13.5 points. So you can use this really on any platform. And I'll go in, and I'll just basically measure that one deviation high to low for when I hit that. And so you can see, like, right up here, we hit it at this point right there. That's like 12. But if I go all the way back to our overnight low, to get the full day session,
okay.
We go over here, bring it on up to the same point. We basically get exactly a deviation high to low move. And that's the expected move. That's the most the market is expecting the market to move that given day.
13 points?
Yep. So on the Russell. So the Russell, the exact expected move was 13.5 today. And that was literally like what was expected. If I can go over, we can look at the other indices and see the exact same thing. But what that does is, if I know what the expectation is, that gives me several advantages. One, I should be tightening my stops on any positions I have long, right? If I'm going, if the market's ran up and it's almost at that 13 points, I should definitely be tight. Go ahead.
13 points from what point? I mean, 13 points
from the low since the last close, or from the high since the last close. So that's the high to low since the market settled like the previous day.
So would you include yesterday? I mean, the markets were open temporarily on a.
Yes. So I actually tell you the exact settlement right here. Like, and this is not any given day. This is just for today. That number only works for today. Okay. So 1138.3. That was the settlement number we used, and that's like we're running up out of time. But yes, I would use that number from settlement, high to low, and I post the exact settlement price for you. And I update the numbers every day for every single market. And that's the number one thing I use to know how far a market's going to move, to know when to expect to turn around, when to tighten stops, and when to stop adding in to a position.
Okay. Thanks,
all right. Hey, you bet. Thank you for calling in. You have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.